I got into Elliott Wave trading, and it's really transformed the way that I look at markets in terms of how to view price action and how I see trading opportunities, risk management, etc.
We have a special new guest, Jason Appel with Elliott Wave Trader. Jason, thanks for being with us.
Very welcome. Good to be here. Excellent. Well, I have a long history, I guess, with futures trading. I started working on the trading floor at the Chicago Board of Trade out of high school. I worked in a variety of different pits and eventually got hired for a group to trade electronically in the early 2000s, and have sort of stuck with it for all these various years and got into Elliott Wave trading as a technical discipline, more specifically. And it's really transformed the way that I look at markets in terms of how to view price action and how I see trading opportunities, risk management, etc.
A lot of the viewers here may not really have that foundational background in Elliott Wave. So why don't you take a few minutes and just talk about the idea of Elliott Wave and how Elliott Wave got to where it is today?
Elliott Wave is a form of technical analysis. Okay, so we're not really interested in news narratives or fundamental analysis in particular, really just focusing on price action that goes, whether it be a line chart or a candlestick chart, etc. And you can use it with a couple other technical studies in tandem. And I don't necessarily look at it as that, Elliott Wave is going to be applicable to all situations. We still want to be judicious in terms of how we look at a chart, let's say, that's neatly fitting into our expectations around the pattern. But essentially, the theory here is that markets will tend to form their trending movements subdivided into 5-wave structured formations. And when we see these type of patterns emerge, we would identify in that circumstance a good, confident roadmap for how price is going to go out into the future based on what's happened already, supposing that we're seeing the right type of setup. And so I can give a couple examples of that.
Yeah, let's take a look at your charts.
Great. Here I have a 1-hour candle silver chart posted here. The theory here, you can see, for example, we have an uptrend from the August lows in silver. I'm labeling this here with the assumption that this formation here will take a 5-wave move. My major waves of this are at this degree. We can call this circle 1, circle 2, circle 3, circle 4, and circle 5. And how do we know to be looking for something like this? We typically are going to want to ground this into a larger degree to understand that we're in an uptrend, well, this trend being an uptrend at multiple time frames. So you can see here, for example, now we're on the daily chart, and now I'm going back here to the 2022 low. Let's say we're looking for an uptrend. We would be looking for a completed corrective pattern. So we label that as an A, B, and C. That is going to be a 3-wave move that is counter trend. Okay. And at the completion of that, before we're taking any action, we are waiting for a 5-wave structure. So after we see this A, B, and C into that 2022 low, you can see from that low, we formed a 5-wave uptrending structure into this May 2023 high. And once again, then we got a corrective pullback that we can see from that low. And at that point, we have good expectation of upside follow through to various Fibonacci extension regions. So again, our establishing of the trade is that we get this corrective move that is potentially complete. We don't have good evidence of completion until we see a resumption of the larger uptrend with 5 waves, and then we see another corrective 3-wave pullback. At the completion of this pullback is where we're starting to look for longs. And one of the things we may do to look for longs is to measure out a retracement zone here. We're typically looking for a long on a wave 2 inside of this 0.618 to 0.382 retracement zone. In this case, we came really nearly all the way down to the 618 zone. This would be an area where we would look to accumulate longs, and this idea for trading much higher here up to the 1.0 extension and then the 1.382 extension is valid so long as we are above the start of that initial 5-wave move that we saw. So what we're looking for then is all of our uptrending structures to take shape as 5-wave moves. This is not really a very attractive wave one. We don't have a clear 5-wave subwave pattern inside of the wave one. But when we look at the wave three, for example, we have a clearer 5-wave subwave pattern that I could draw in. And I can drill into how we would use this at a smaller time frame. Same type of pattern that we're working with here at the larger degree. We'll go back to this 1 hour chart that we were looking at the beginning. And you can see from this May high, we are looking for the bigger 5-wave structure up here. That would be that regular 5 that we're looking to reach at least the 3688 region. Well, what do we have off of the May high? We have a 3-wave decline. We have a 3-wave ABC pattern into this August low. And then we have a really clear 5-wave subwave move into the August high. We get our pullback into the support zone here. And this is a zone where you'd be looking to enter longs to play for substantial upside here. And then we can even apply this then at another smaller degree off of the September high. We once again have a 3-wave corrective pattern into the October low. We get that 5-wave move for the wave one. We get the wave two pullback, and we get this big extension to the upside. And this was trades that were talked about in real time in the Elliott Wave virtual trading room. And so the story here is where we identify the biggest moves in the market are always going to, not always, sometimes they'll be in the 5th wave, but I want to say the majority of the time we're positioning in advance of this big 3rd wave. Within the 5-wave structure, the 3rd wave is where we tend to see the big breakout overall. So we want to position inside of the wave 2. So we wait for the wave 1 to complete. And once the wave 2 is pulling back into our ideal retracement region, that's where we accumulate longs to play for the wave 3 of various degrees. And so essentially what this allows us to do is to frame out really excellent risk to reward trades where you're taking relatively small risk. Here I can show with our risk to reward tool here. So for example, if we measure out this wave 1, we can see here our support zone is in this region. We'd be looking to get long inside of this region here overall. And then we would be looking for an extension. What we typically identify as a standard extension for our 3rd wave is going to be up into this 1.618 extension zone. And you can see inside of this, even without needing to bottom tick this, but instead just trying to get along somewhere in the middle of this retracement zone. And even if you're waiting all the way until the bottom of invalidation, you're getting something like a 3.6 to 1 risk to reward ratio here, which is really outstanding. We have a roadmap along the way of how we want to see price develop in terms of pattern that would allow us to intelligently move up our stops along the way so that we can continue to preserve a good risk to reward ratio as we move through the trade and not to just leave those targets and those stop points at static intervals.
That's a great tool. I love that. Very clear, visualizes the idea, shows you the numbers. That's really a powerful tool. So just to be clear, there's multiple Elliott Wave patterns here on the chart, and each of them work together to develop the overall strategy.
Yeah, there's a great word that is used to describe this. Elliott Wave is called a fractal form of analysis. And so what this means is that the patterns that we see at large and small degrees are all self-similar, meaning that, for example, if we're talking about this wave 5 that we're looking for off of the August low, we're not terribly concerned with the timing on this. This is primarily a tool for price analysis, but we're looking for a 5-wave structure for this wave 5. And then inside of the moves that are advancing price in the direction of our trend, we're again looking for 5-wave subwave structure. So again, inside of our wave 1, we see this 5-wave Elliott Wave pattern, the corrective pattern for the wave 2. We see 5 waves inside of the wave 3, we get corrective patterns inside of the waves 2 and the waves 4. So this allows us a dynamic contextual roadmap where we can look at any activity and talk about where are we within the trend contextually at large and small degrees. And so this is not necessarily distinct from trend analysis, but this gives us a huge advantage over just doing trend line analysis. It allows us to say, where are we within this trend? How much additional upside are we expecting? And this allows us to say when we're getting near a completion, hey, this is really an area where we need to be trailing our stops a little bit more tightly. It doesn't mean that price can't continue to extend in the direction of our trend. We don't want to be fighting the trend, But we do get an idea, for example, when we're getting up to the 1.618 here, that this is around a region where we can reasonably be expecting a reversal. And so it doesn't necessarily mean that we have to take profits right at this level. But when you can see we have 1, 2, and 3 and 4 waves within this fifth wave, and we're reaching the 1.618, at that point, I would want to trail shorter term stops to just below this fourth wave here, particularly when we're talking about futures trading. Silver is a highly leveraged contract. If you're talking about entering here on this wave 2, for example, at 31.50 or so, and now you're getting out at 34.65, I mean, you're talking about $15,000 per contract there. You don't want to be taking huge drawdowns. So at that point, we're looking to take some profits and then trail stops up to this zone. And you can see we would get taken out here. Though we do get a bounce back higher, it's an indication that we are starting some larger degree pullback. At this point now, we're looking for a completion in this wave 4. And again, we'll look for that process to start again, where we get an initial 5 waves up for this wave 1 of 5. And then we'll look to trade that wave 5 to the upside here.
I love the Fibonacci integration here. Was that an original Elliott Wave thing, or is that something that you guys have integrated?
This is something that's part of Avi Gilbert's work. So I'll just go back to my background a little bit. I started as a subscriber to ElliottWaveTrader.net and started watching these market calls that really had nothing to do with what the fundamental narrative was, and got really interested in learning Avi's methodology. And so this is sort of Avi's contribution to Elliott Wave, which is that we wait for the waves 1 and 2 to shape up, and that gives us what he calls Fibonacci pinball, where we see price bounce back and forth between these key Fibonacci levels. And we can do this rather accurately once we have the initial wave 1, 2 of our setup. We do see instances where price massively exceeds these zones, but this really gives us a great idea of where we want to look to take profits, manage risk, trail stops, etc. It tends to be a really nice way to view markets in a trending context for having a roadmap to allow us to manage risk this way.
I love that integration. They really seem to fit together very well. They really help each other get the idea across. We'll need to have you back again to go through all of these really amazing tools that you guys offer.
I appreciate it, Mike. Thanks a lot.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.